A little bit off the charts, yeah, when it comes to the movements higher. Well, how's this for timing, Mark? We are just 1 week shy of the 15-year anniversary when the NASDAQ first reached 5,000 back on March 9th, 2000, and then the following day set its record high of 5048.62. So this is today's chart. It shows the recovery back to those levels. You have two distinct peaks. The first one on the far left is the dot-com bubble, the sharp move up, and then the precipitous drop down with the NASDAQ bottoming in October of 2002, closing at 1114. What we saw was the index doubling in value in the run-up to the housing bubble, but it didn't even reclaim 3,000 before it was knocked down again by the subprime crisis. The low set in 2009 was a higher low than the low that we saw in 2002. And since then, it's been a pretty steady climb up. And Jamie, if we can pull that chart back up again, you can see the trajectory of the increase makes it look a little less extreme than the last time around.
Scarlett, let's revisit the first trip to 5,000. It was a pretty rapid move past 2,000, 3,000, 4,000, then 5,000. Yeah. How do you quantify how long it took to get there the first time around versus what we're seeing this cycle?
Well, I used the Bloomberg terminal. This is a shameless plug, of course. I was able to calculate the number of days it took for us to get from 4,000 to 5,000. And what's notable is that this time around, it took about 15 months to go from 4,000 to 5,000. In 1999 to 2000, roughly 10 weeks. So this time around, 461 actual days, 313 trading days. In 1999 to 2000, 71 actual days, 49 trading days. That just gives you a sense of how rushed, how much of a frenzy, how frothy it was back then.
Scarlett, when it comes to fundamentals, what's the big difference this time around?
Well, the big difference is valuations are not as stretched as they were in the dot-com frenzy. Do you remember the PEG ratio, the price to earnings to growth ratio that people concocted as a way to value earnings in the NASDAQ? We're not really talking about that anymore. So let's go with the old school metric of PE ratios, price to earnings, which looks at historical earnings or maybe estimated earnings 1 to 2 quarters out. Right now, the NASDAQ currently trades at under 32 times earnings. That's the far right side of the chart. In March 2000, Mark, when the NASDAQ set its high, the PE was 175. Valuations then skyrocketed as earnings cratered and companies went under in the crash that followed. That's when the PE got to almost 600, above 500 in December of 2001. So we're a long way off from those levels. We probably won't revisit those levels again. If you look at how big and influential tech is now versus when it was in 2000, it's interesting here because tech makes up a smaller part of the S&P 500 now than back then, 20% versus 35% back then. Yet it's more influential in earnings, making up 19% of operating earnings as opposed to 13% back in 2000.